Good day everyone. My name is Lahmuddin S. Zainuddin. Today we will tackle about revenues and other receipts. What is revenue? Revenue is a gross inflow of economic benefits or service potential during the reporting period when those inflows result in an increase in equity other than increase relating to contributions from the owner. Revenue includes only those that are received or receivable by the entity in its own account. Receipts refer to actual cash collections from all sources during a period. So, the fundamental principles for revenue. So, first one is all revenues of an entity shall be remitted to the national treasury and include in the general fund of the national government unless other laws specifically allows otherwise. So, all monies and property received by a public officer acting in any capacity or upon any occasion shall be accounted for as government funds and government property unless another law specifically states otherwise. Third is amount received in trust and from business type activities of the government may be separately recorded and disbursed in accordance with the relevant rules. So these receipts shall be recorded as revenue of all special fiduciary or trust funds or funds other than the general fund only when authorized by the law. A collecting officer shall immediately issue an official receipt upon collecting a payment of any nature. Where mechanical devices, electronic official receipt are used to acknowledge cash receipt, the COA may approve upon request the exemption from the use of accountable forms. Temporary receipts shall never be used to acknowledge the receipt of public funds. Pre-numbered official receipt shall be issued in strict numerical sequence. Duplicate copies shall be the exact copies of the original. A collecting officer shall accept payments to the government in the form of checks. Upon proper endorsement and identification of the payee or endorsee, the collecting officer shall not use government funds to encash private checks. Receipts of government funds shall be acknowledged in accordance with the law, indicating the date of receipt, from whom and on what account the fund was received. Types of fund. General fund, a fund which is available for any purpose other than those which other funds have been resigned to. Special fund, a fund designed for special purposes. Trust fund, fund held by the government agency or public officer acting as trustee, agents, or administrator for the fulfillment of a condition. Revenue fund comprises all funds derived from the income of any government agency and available for appropriation or expenditure in accordance with the law. Depository fund, fund held in an authorized depository bank over which the recipient agency retains control for the lawfulness purposes for which the fund was received. Special account in the general fund, established to facilitate the funding of priority activities of the government. The special account in the general fund is sourced from specific fees, grants, and donations, and other sources identified under the law. The following are relevant legal provisions regarding the SAGF. Special purpose funds are funds that the presidential locates for special programs and projects. Unlike for other funds, special purpose funds are not under the accountability of any particular government agency, office, or units. Source of revenue. Revenues may arise from exchange and no exchange transactions. Exchange transactions or reciprocal transfer are transactions in which one entity receives assets or services or has liabilities extinguished and directly gives approximately equal value to another entity in exchange. Example, sale of goods and rendering of services. Non-exchange transactions or non-reciprocal transfer are transactions in which an entity either receives value from another entity without directly giving approximately equal value in exchange, or give value to another entity without directly receiving approximately equal value in exchange. What is bequest? Bequests are transfers made according to the provision of a deceased person's will. A bequest that satisfies the recognition criteria for asset is recognized as revenue, measured at the fair value of the resources received or receivable. Grant with condition. As an asset received under the grant with condition is initially recognized as liability and recognized as revenue only when the condition is satisfied. Concessionary loans. A concessionary loans are loans received by an entity at below market terms. The entity considers whether the difference between the transaction's price and the fair value of the loan on initial recognition is a non-exchange transaction. If it is so, the difference is recognized as revenue, except if a present obligation exists, in which case the difference is recognized as a liability and recognized as revenue only when the obligation is satisfied. Other receipts. Other receipts include but not limited to the following: A. Receipts of subsidy from the national government, such as receipt, notice of cash allocation or NCA, tax remittance advice, non-cash availment authority, and cash disbursement ceiling.